If you're a widow or widower collecting Social Security, or if you're planning retirement and your spouse earns significantly more than you, this video is for you. Not for everyone. For the specific group of people who have quietly wondered whether the number on their Social Security statement is the highest it can be. Here's the confusion that shows up in comment sections every single week. People use the words spousal benefit and survivor benefit as if they mean the same thing. They don't. One pays up to 50% of your spouse's benefit, and it applies while your spouse is still alive. The other can pay up to 100%, and it applies after your spouse dies. They are separate calculations with separate rules. In specific situations, they can be sequenced, one claimed first, the other claimed later. That distinction has a dollar consequence, and it is almost never explained clearly in one place. Today, we go through 6 Social Security and Medicare benefits that most widows and seniors never claim out of order. On purpose, building toward the one item that directly answers whether the amount on your check is correct. Quick context before we start. This video is for United States widows, vidovers, and married seniors approaching retirement who want to understand how Social Security survivor and spousal benefits actually work and which Medicare cost-saving programs they may qualify for. Everything covered today comes from publicly available official information, the Social Security Administration, the official Medicare website administered by the Centers for Medicare and Medicaid Services, and reporting from AARP and the National Council on Aging, and each source is named as we go. This is educational content only. It is not personalized financial, tax, or legal advice, and nothing here is a promise that you will receive any specific amount of money. Everyone's situation is different. Before any major decision about your benefits, please speak to a licensed financial planner or Social Security benefits counselor who knows your full picture. Now, 6 items. Starting with number 6. Number 6. While your spouse is alive, you may be eligible for a Social Security benefit based on their earnings record rather than your own. The Social Security Administration calls this the spousal benefit. The maximum is 50% of what your spouse would receive at their full retirement age, not 50% of what they actually receive, but 50% of what they would have received had they waited until full retirement age to file. There is a rule called deemed filing that governs this benefit. Per the Social Security Administration, when you apply for a spousal benefit, you are automatically considered to be applying for your own retirement benefit at the same time, and the agency pays you whichever is higher. Since 2016, you cannot take only the spousal benefit and let your own record grow separately. The exception, and this is the detail that connects directly to the final item, is that deemed filing does not apply to survivor benefits. That single exception is what opens the strategic door we will cover at number 3. Number 4. If you have Medicare Part D prescription drug coverage, and most Medicare beneficiaries do, there is a federal program that can dramatically reduce what you pay at the pharmacy. It is administered by the Social Security Administration, called Extra Help, and also known as the low-income subsidy. According to the Social Security Administration, the average annual value of Extra Help is approximately $5,700 per person. In 2026, most people who qualify pay no more than $5.10 per generic prescription and $12.65 for a brand name drug. Once your total out-of-pocket prescription spending reaches $2,100 in a calendar year, your copays drop to 0 for the rest of that year. The income limit in 2026 is roughly $23,400 a year for a single person, approximately $1,950 a month, and roughly 31,007%. $100 for married couples. You apply through the Social Security Administration. According to the National Council on Aging, billions of dollars in Medicare cost-saving benefits go unclaimed every year. Not because people don't qualify, but because they assume they won't. Number 2. Some Medicare beneficiaries pay significantly more than the standard monthly Part B premium. That extra charge is called IRMAA, the Income-Related Monthly Adjustment Amount. Per the Centers for Medicare and Medicaid Services, IRMAA applies when your income from 2 years ago exceeded certain thresholds. The standard Medicare Part B premium in 2026 is $202.90 a month. And IRMAA surcharges can add several $100s more if your income 2 years ago was higher than your income today because you retired, because your spouse died, or because of another qualifying life change. You can file an appeal to have that surcharge reduced or removed. The form is called the SSA 44, filed at the Social Security Administration with documentation of the life-changing event. Per the Centers for Medicare and Medicaid Services, qualifying events include retirement, reduction in work hours, divorce, and death of a spouse. Removing a surcharge you no longer qualify for is correcting a premium calculation still drawing on outdated income data. Number 5. There are state-run programs that can pay your Medicare Part B premium directly on your behalf every month. These are called Medicare Savings Programs. According to the official Medicare website and the Centers for Medicare and Medicaid Services, there are 3 main tiers. QMB, Qualified Medicare Beneficiary, can pay your Part A and Part B premiums, deductibles, and copays for single-person monthly income up to roughly $1,350 in 2026. SLMB, Specified Low-Income Medicare Beneficiary, covers the Part B premium for income, up to about $1,616 a month. The QI program covers the Part B premium for slightly higher incomes, up to about $1,816 a month, approved on a first-come, first-served basis and renewed each year. You apply at your state Medicaid office, not at Social Security, not at Medicare. According to the official Medicare website, some states use more generous limits than the federal minimums. So apply and let the state decide. QMB enrollment also automatically qualifies you for extra help on prescriptions. Number 1, some Medicare Advantage plans offer an over-the-counter or flex card allowance for health-related purchases, dental care items, vitamins, first aid supplies, and in some plans, utilities or groceries. These allowances range from $0 to several $100s per quarter depending on the plan and region. This is a plan-specific feature, not a standard Medicare benefit. And several major plans have reduced or restructured these allowances in the last 2 years. If your plan had an over-the-counter allowance before, verify the current amount in your evidence of coverage document sent every fall, or call your plan before assuming last year's amount carries forward. Before the final item, a realistic picture of what the confusion this video is built around actually costs. Margaret is 69. A retired bookkeeper from rural Indiana. Her husband worked 32 years in manufacturing and claimed Social Security at 63. He died 2 years ago. Margaret had been collecting her own smaller Social Security record and assumed that because the agency was sending checks, she was receiving everything she qualified for. A neighbor's mention of widow's benefits prompted her first call to the Social Security Administration. She was told she could switch to survivor benefits based on her late husband's earnings record, which, even with his early claiming factored in, paid measurably more than her own record. Her monthly income increased. The switch was straightforward. But because no one told her and she did not know to ask, 2 years had passed. At a rough difference of several $100s a month over 24 months, that delay represented a meaningful and permanent loss of cumulative income, not because of any error, but because the agency processes claims that are filed, and no one filed the right one. Illustrative composite built from AARP benefit case patterns and Social Security Administration survivor benefit calculation rules, not a record of any specific individual. Number 3, when your spouse dies, a separate category of Social Security benefit becomes available to you. The Social Security Administration calls it the survivor benefit, though many know it as the widow's or widower's benefit. This is not the same calculation as the spousal benefit in number 6. Not 50%, up to 100% of what your spouse was receiving, or in some situations, up to 100% of what they would have received at their full retirement age. Per the Social Security Administration, if your spouse claimed before their full retirement age and received a reduced monthly amount, that reduced check is not automatically your ceiling. In most cases, the floor for your survivor benefit is at least 82.5% of what your spouse would have received at full retirement age, even if they claimed early and received less. This floor protection, confirmed by Kiplinger as one of the least known provisions in the system, means your spouse's early claiming decision affects your survivor benefit less than most people assume. The range runs from 71.5% to 100%, depending on the age at which you claim. Survivor benefits can be claimed as early as age 62, full years earlier than any other Social Security retirement benefit. Claiming at 60 permanently reduces the benefit to 71.5%. Waiting until your own survivor full retirement age delivers the full amount. Now, the sequencing rule. This is the specific part of survivor benefit rules that differs from everything in number 6. Per the Social Security Administration, confirmed by AARP, deemed filing does not apply to survivor benefits. In qualifying situations, a widow or widower can claim survivor benefits at age 60 and allow their own retirement benefit to keep growing with delayed retirement credits until a later age, then switch to their own record if it eventually becomes larger. Or, if the survivor benefit will be higher, some people benefit from claiming their own record first and delaying the survivor benefit to avoid the permanent early claiming reduction. The right path depends on the size of both records, age, health, and other individual factors. A licensed financial planner or certified Social Security claiming specialist can model both scenarios using your actual earnings records. Critically, you cannot apply for survivor benefits online. Per the Social Security Administration, survivor benefit applications must be submitted by phone or in person. If you were automatically converted from spousal benefits to survivor benefits when your spouse died, that conversion does not guarantee your amount is set to the highest available level or that sequencing was considered. If you have never specifically called to ask about your options, that call is the one action this video is asking you to take. Here is the recap. Number 6, Social Security spousal benefit. Up to 50% of your spouse's full retirement age benefit while they're alive, subject to deemed filing. Number 5, Medicare Savings Programs QMB. SLUM and QI applied for at your state Medicaid office. Number 4, Medicare Extra Help, the low-income subsidy, administered by the Social Security Administration, worth approximately $5,700 per year on average, according to the SSA. Number 3, Medicare Advantage OTC, or Flex Allowances Plan-Specific, variable. Verify your current amount. Number 2, IRMAA appeal via the SSA 44 form, filed at the Social Security Administration after a qualifying life event. Number 1, survivor benefits up to 100%, available as early as age 60, not subject to deemed filing, sequenceable in qualifying situations, applied for by phone or in person only. 3, if anything here made you question whether your current benefit amount is correct, the first step is your My Social Security account, where you can see your retirement benefit estimate and earnings history. Log in, note the number, and make the call. Staying where you are is not neutral. Each month, at a lower amount, is income that does not come back. 2, before any major claiming decision, speak to a licensed financial planner or certified Social Security benefits counselor who knows your complete picture. The figures here are accurate for 2026 based on the Social Security Administration and the official Medicare website. But your individual result depends on factors this video cannot assess. 1. If you know a widow or widower who has collected Social Security for years without asking about survivor benefit options, share this with them. One conversation with the Social Security Administration can permanently change the monthly income picture. If you have a parent, sibling, or neighbor who is widowed and navigating this alone, send this to them directly. The distinction between spousal and survivor benefits is something most people learn only after the window, for some strategies has narrowed. To review the Medicare Savings Program income limits, scrub back to the 7-minute mark next time the Social Security Fairness Act, which recently eliminated WEP and GPO for millions of government employees, teachers, and firefighters, and what that change means specifically for survivor and spousal benefits in those households. See you there.